what I find really fascinating is these statements about the rationale behind the ECB's view on monetary policy. So ODDGF is this optionality, data dependence, gradualism, and the idea that it is the new forward guidance, basically. So I think the ECB is keeping all options open. This optionality is very important. Gradualism is very important, but also this data dependency is very interesting. You were mentioning the fact that the inflation projections are actually in the statement of the ECB. That means, because for me, I think central banks, just like everybody, is a bit lost when it comes to projecting inflation. But that means they're trying to anchor something, and this idea that they have inflation forecast above 2% by 2024 is, I think, a statement more than a projection. So that's what I meant. It was a bit for the pundits out there. I think it's I didn't think I would see in the next 10 years of my life an increase in interest rates by the ECB, and go figure, it's happening next month. So after 11 years, so it's quite a change of world we're living in.
It certainly is, and a new world for so many market participants. It's a new paradigm. What about the more medium term for the ECB? They were so clear in their expectation for 25 bips in July. September seems like they're leaving the 50 basis point option on the table. What about beyond that? What should we read?
That's interesting. I'm in the camp of 25 bips in September. I think it will be really hard for the ECB to have a 50 bips hike in September, just because they are so conservative in the way they sequence and they actually communicate to the market. But let's see, right? We could have other negative surprises on inflation, even though we think we are at peak right now in the Eurozone. But beyond that, and this is really interesting, markets are still pricing in 220 basis points of interest rate increases in the Eurozone. So meaning as much as in the US. I don't buy that. I think it's going to be very hard once the ECB gets closer to the neutral rate, if we believe there is a neutral rate, to actually hike, with a standard pace of 25 basis points all through 23. I think it's going to be difficult because growth is going to be slowing down in the second half, because obviously inflation is also slowing down. So we still think that there's going to be a pause somewhere in the, in the middle of 23, just like we think there's going to be a pause somewhere around the turn of 23 for the Fed. But right now, the expectation is indeed we can have this space and we can actually keep increasing and managing price stability with all the tools at our disposal, which I think is the statement they wanted to convey today.
And Ludovic, do you think that do you make that statement because you don't believe that the Eurozone is at risk of seeing a price wage spiral? Is it because the US is seeing so much more wage pressure than you're seeing in Europe? And I guess as a follow-up to that, we are still waiting to see how labor union negotiations go over the coming months. And are you suggesting you don't see much progress on that front?
I think on the first hand, I think Europe's inflation is vastly caused by the two negative supply shocks, right? So the energy crisis and the zero COVID policy in China, much more than in the US. I would say 75%, 80% of our inflation is due to these negative supply shocks, whereas in the US, it's more half of it. So the overheating is already there in the US. And so the second point you raise is the wage price spiral. In our models, we think that a wage price spiral is actually possible as a trigger as early as the fall for countries like Germany or France, where the labor markets are quite rigid. So there is a risk, right? And I think we're going to continue to monitor that. I think wage moderation is still the name of the game. If you look at the number of wage growth, especially in Northern Europe, apart from Belgium, where there is an automatic indexation. So I think there is, and governments are really at it. So they're trying to get non-salary based, purchasing power offsetting mechanisms, right? So they're trying to make sure that wages don't get into this spiraling mechanism. So for me, I'm still, I'm still a strong believer that growth is going to bite us in the back before we get to hike beyond, I would say, in Europe, 1%, 1.25%. So I don't buy the full range of a very strong tightening cycle. But hey, how many surprises have we had in the past 3 months, 4 months with both the war in Ukraine and the supply shock from China? This has been a major driver behind the call for the ECB to act, just to remain credible. And so it's not to fight overheating, but it's really to show we are here for price stability, and we are here to make other policymakers' job much easier. Because remember that inflation, everywhere is making everybody else's job much harder.